Morning, everyone. I'm Vicki Knott, CEO and co-founder here at CruxOCM. So we have another video blog for you all. This one today, we're going to be interviewing someone who's on the Crux team, but he's actually a former investor and trader in oil and gas. So especially with what's going on in the world today, we thought that interviewing Alex would be really interesting for everyone. So we will dive in. Alex, welcome and thanks for coming. Can you please tell us a little bit about your super interesting background?
Yeah, no, of course. Yeah, thanks for having me on, Vicky. So by way of background, I cut my teeth in the energy industry by trading physical oil and gas at JPMorgan. Way back when they were more active in the space. Then I went on to become a portfolio manager at Millennium Management, giant hedge fund, running a traditional long-short equity strategy. While I was there, I put a lot of emphasis on energy and software names.
Yeah. Energy and software, fun.
Yeah.
Energy and software. So then that brought you joined Crux. So you can tell, yeah, it was actually hilarious. We were recruiting for VP Finance, and Alex's resume came up, and it was like, oh, he's like the perfect fit for Crux. And then, fun fact, he used to work with my best friend's husband, so we're lucky to have him and excited. So okay, let's talk geopolitical wild cards, because there's definitely a lot going on geopolitically right now. So as a former oil and gas investor, how do you distinguish between a short-term geopolitical spike that's happening in oil and gas commodity prices right now versus a shift in like market fundamentals?
Yeah, no, great question. So generally in the short term, geopolitical headlines really move spot prices and the time spreads through, fear and positioning, right? So if you see little like actual change in long-term global supply of barrels, that in itself is kind of a geopolitical spike, right? And these spikes really tend to revert back to kind of, pre-spike as positioning in the market's clear. For more fundamental kind of longer term shifts, you really need to start seeing structural changes in the industry. For example, actions that actually curtail production and exports, structural underinvestment in certain basins globally, or policy changes that hamper demand and really raise the cost of capital for operators in the industry. So a lot of these changes, kind of show up in the forward curve lifting, and then kind of break evens creeping higher, and then you get kind of the follow-on kind of capex guidance changes across the E&Ps across the industry.
So would you say that like this disruption is creating an opportunity for different players to gain more market share?
No, for sure, right? And it's, things that are happening in particular Iran, very topical. It does kind of give or reminds the market that there is always kind of this tea kettle kind of in the Middle East where a lot of the supply can get disrupted, right? Especially with the Strait of Hormuz. It's 20% of global kind of supply routes and production. So yeah, once that kind of gets, kind of backlogged and kind of taken offline, you do have this massive opportunity to kind of rebalance kind of global supply demand kind of going forward. And really that's, you kind of seeing that reflected in Brent and WTI. Right now it's, I think, WTI and Brent, it's trading around like $110 per barrel right now.
So like there's an opportunity. And so how does this impact US energy security long term, since that's where we are?
No, for sure. So just from a US security perspective, this really matters because you can't really build strategy around every headline, right? So for me and for the market, two things still remain true for the US. So one, the domestic energy consumption continues to grow, right? Specifically in the commercial and industrial sectors. But again, kind of supply constraints are still there. So, recently at CERAWeek, Google's global head of energy, I believe her name is Amanda Corio, blatantly stated that bottlenecks in natural gas supply is constraining Google's AI data center ambitions, their growth there, right? And the second part is so true for the US. The US now is, widely accepted as the most dependable swing exporter of both crude and NGL.
Right, to meet that demand on like short-term turnaround kind of thing, right?
No, for sure. And like, with the growth of shale, in the past 10 years, outside of like Saudi, the US, just because of the short life cycle of shale, you could get from, spud to first oil in kind of less than 30 days now,
Yeah,
right?
which is
So
incredibly fast.
yeah, and it's a huge monumental shift in the global supply dynamic, right? So if you think about historically, there's been kind of longer term oil sands, offshore, traditional kind of onshore production. Those have very long tails, right? It takes, offshore takes at least a decade of planning to, everything and to get first oil. But yeah, with shale, it's super quick. And, a lot of the US shale basins are, maturing, but there's still a lot of kind of technological operational advances that can still be made. So really, that swing barrel is now becoming more
Really
dependent on
important.
the U.S. and it's good and to ensure kind of U.S. energy security. The
Yeah.
industry as fragments and as a whole really does need to maximize the throughput capacity to really ensure two things, right? Like one, domestic energy security, being able to meet the demand of the domestic US and Canada, some parts, then also to maximize export capacity, right? And
Right.
to your point, operators that can really flex their throughput capacity
Yeah.
can really take advantage of these, structural opportunities.
Yeah, so essentially what you're saying is like, okay, there's an opportunity in the market. The US is extremely well positioned with its swing barrel capability to be able to fill that demand. So let's zoom in deeper then into like, the infrastructure here in North America, and like let's look at the midstream level. So because Crux works in midstream. Midstream is typically the bottleneck between production and export. That's just the reality.
For
So
sure.
if an average break-even cost for many of these producers is currently, 60, $70 a barrel, especially in the Permian, if production stalls due to lower prices, how does a midstream company protect its take or pay contract revenues?
No, for sure. So like if TI prints below break even, you have a real risk of drilling activity slowdown, right?
Right.
Especially for longer dated CapEx projects, offshore oil sands. And then to your question, even though take or pay contracts provide kind of this baseline revenue, they're
Nice
not
buffer,
bullet.
yeah.
Yeah, for sure. They're not bulletproof by any means, right? Especially if counterparties are stressed or if you have severely underutilized assets, they're quite expensive, right?
Right. So then how would a midstream company protect its take or pay economics in the current, upset world?
No, for sure. So like I invested a lot in midstream back my hedge fund days. If I was them and kind of drawing on my history here, there's kind of two things you can focus on, right? So one is really the portfolio and contract design, right? You want
Yeah.
really diversified counterparties in different basins, be it gas or oil or kind of a mixed portfolio of the two. You really want stronger credit support as well, and honestly, really flexible and MVC rights, right? So minimum volume contracts. To me, like, for midstream producers, they would rather have kind of slightly lower tariffs across a diversified shipper base than
Right.
max price with concentrated risk, right? It's just simple portfolio kind of
Yeah,
theory there.
portfolio diversification.
No, for sure, yeah. And then two, like operational flexibility. This is
Yeah.
probably the most important, right? So as customers will demand more operational and honestly the contractual flexibility as margins kind of compress, right? So the more that's where having more agile pipelines and operations as a whole really lets you repurpose capacity to either different grades, origin points, destination points instead of really letting your pipelines sit underutilized, right? So again, like the real edge for these players is the flexibility both in their book of business and the physical pipeline system itself.
And that's to be able to, so exactly how you explained, like the US being a swing producer, it's like, okay, well, all of the assets inside of the US also need that swing production capability to be able to keep up with, the Permian's 30-day turnaround, right? Like all of these assets need to be able to keep up.
Yeah.
So yeah, so that's definitely interesting. And that goes to the whole like bottleneck thing that we talk about quite often. So one thing that is interesting, and this is like kind of turning a little bit, but more to Alex's background, in investing. Something that being a technical person from oil and gas that I found super fascinating and would love to talk about is how are midstream companies valued in the stock market? So like, I was at TC Energy, I was getting my options plan or whatever, and it had a certain value, and I understand now with startups, how startups are valued, but like, how is a midstream operator actually valued on the stock market?
Yeah, no, for sure. Great question. So midstreamers are usually generally valued on a EV to EBITDA basis, on
Right.
a forward basis, right? So
And
EVs,
can you say
enterprise.
what those words mean for our more technical audience?
No, for sure. So EV's enterprise value, it's the
Yeah.
full value of the company. So that includes equity value, debt, and then like shareholders'
And
equity
also called
as well.
market cap sometimes.
So market cap is just for the equity piece,
Okay,
right?
just the
So
equity piece. Great.
for sure, yeah. So like, there's equity piece, there's a debt piece, and there's also like, that includes kind of shareholder equity as well.
Right.
Yeah, so generally midstreamers and a lot of the oil and gas companies, upstream and downstream are kind of valued on this enterprise value over EBITDA on a forward looking basis. And of course, like, there's a lot of analysis and kind of nuance on the EBITDA forecast, right? And
Right.
the multiple itself,
And EBITDA
that
is earnings
ratio.
before
What's that, sir?
EBITDA again for our technical audience.
Oh, sorry, EBITDA. Yeah, so earnings before interest, taxes, and depreciation and amortization. So it's really
Essentially,
your
it's like how much
cash.
money you're making minus a few things.
Exactly. It's a lot of the kind of the more accounting kind of, you strip out the accounting kind of basis, and really, tax treatment, you kind of strip that out as well. That it's your pure earnings potential, right? You're more similar to kind of the cash flow basis. So
Right. Okay. Yeah. So then that's
yeah.
really, it's like cash on hand. So then it's like that's how we, the street thinks about midstream operators. So to tie that back, like a midstream operator with more flexibility that can capitalize on a geopolitical disruption like this, by increasing production quite quickly, has a significant opportunity, by the sounds of it, from an EV perspective on Wall Street.
Yeah, no, for sure. For especially like the multiple, right? So everything on the street trades on a relative basis, right? So
Yeah.
the multiple in this case, EV over EBITDA, is all relative to how the street, investors kind of views a specific company versus their competitors.
Right.
For example, great operators will trade at a premium relative to their peers and vice versa, right? So
Right.
end of the day, these operators are essentially valued on the cash that they're able to generate relative to their peers.
Yeah, at any given time. So
For
that's
sure.
super interesting.
Yeah.
Okay, so then thinking about, like there's a short-term opportunity right now. Maybe there and the US is really well positioned to take some more to more of that global supply. So, but of course, there's solutions like Crux where you can increase capacity via code. There's drag reducing agent, which is excellent. But then, capital projects, building pipeline assets. In the current environment, how should a midstream operator think about prioritizing capital projects?
Yeah, so it's little short history lesson of the
Yeah,
industry here,
please.
right? So like, yeah, so great question, but like especially after the 2010 oil crash, the street, myself included back then, we really demanded, strong, resilient balance sheets, right? A lot of these players kind of before loaded up on debt, loaded up on pursuing kind of really long-term offshore, Guyana, like Papua New Guinea, offshore projects, North Sea, that had really unknown, very long-term kind of ROI, right? And this hyper focus of investors on, fortifying your balance sheets, both for return to investors, but also, stability going forward, either, oil's up, oil's down. It really pushed out a lot of this like long dated mega projects with uncertain kind of timelines, right? And then I would say that was the first kind of fundamental focus change of the industry. And then kind of through the 2010s, you saw a lot of the major US shale basins, Eagle Ford, Permian, Marcellus, really kind of finish their, I would say, kind of like call it their big build phase, like the infrastructure, kind of taking away capacity from there into the, key ports or kind of refining regions like the Gulf Coast. However, on the flip side of that, those regions like the Gulf Coast became extremely congested, right? So right now it's extremely difficult to really build greenfield projects, even brownfield, arguably in those key regions. And then, something more recent, past, call it like 5 to 7 years, really heavy industry consolidation has really exhausted kind of future inorganic M&A growth opportunities, right? There's not a lot of small players left that, the big guys can buy that would meaningfully move the needle for them, right? And then the remaining big players, now they're kind of too big to swallow each other whole, right? It's kind of, it would be like a merger of equals. So you're kind of looking at, North America, for all intents and purposes, is divided amongst, kind of call it like eight to nine kind of big players, right? So, and then really, I still have a lot of friends that are on Wall Street, but the last bastion of growth is to really look inward, right? So operators have to start maximizing their own systems, the systems that they currently own. And, a lot of these CEOs on earnings calls recently, they're talking about, disciplined M&A if that's available, and as kind of we talked about, not so much, but they're really talking about like, greenfield, brownfield opportunities, debottlenecking, and they're talking about like singles and doubles, right? That kind of squeeze that 3 to 5% more out of their current assets.
Yeah, and like essentially, what you're saying is, and what makes sense is, it's like, okay, the midstream industry in North America is a mature industry, right?
For sure.
So therefore, like, their ways to grow historically have been like through acquisition or building pipelines. However, that's not really as easy to do anymore because they've all acquired each other, and they've built a lot of pipelines and things are congested. So it's interesting enough, because then that leads us back into what Crux does, which is the additional throughput via automation, right? So that autonomous operation of the assets. So how do you think that kind of like puts us to Crux? So how do you think Wall Street would then value Crux, given that Crux adds hard barrels, but yet we're a software company?
Oh, I mean, I think that, I mean, that'd be awesome, right? I think the street would love this play. And look, like, if, I was still back the hedge fund, and someone told me, hey, look, there's this company, this asset, whatever, you can black box it, that can get a midstream operator, or even honestly, like, downstream, fully integrated guys, this kind of 7 to 12 throughput uplift, that's real hard barrels, faster and more capital efficient than traditional CapEx projects can. I'd go to every one of my, portco CEOs and say, ask them, like, why isn't this technology deployed across your entire system yesterday, right? Like,
which this probably happened in exactly that way with drag reducing agent, right?
Yeah.
So drag reducing agent was invented. It has exact same value proposition as Crux. It increases volumetric throughput on these bottlenecked assets, right? And like I know the street looks really favorable on LSPI and DRA companies. So what you're saying is, Crux has the same value prop. So the street would look at, a midstream company working with someone like us as a huge value add, as a benefit.
No, yeah, for sure. And I think there's just also another clear opportunity here for these management teams, right? So a former investor, like, for every $1 of EBITDA, the market, just talking about pure midstreamers, kind of values it at, call it like 10x, right? For ease of math. So say like representatively, say across a 1 million barrel a day system, you guys can add call it 70 to 120,000 barrels a day of new barrels. So call it at normal midstream economics, that adds around like $360 to $600 million in additional enterprise value. And that's a huge ROI internally for them, right?
And for our technical audience, that's those shares or those options that you get yearly. That's where that comes in. That's where that value comes in.
No, for sure. And then, also to clarify, like, these would just be, pure midstreamers. These are just tolling revenues, and that benefit they get would be exponential if they have downstream assets, right? And you're talking about, expanding your throughput, your feedstock, either into refiner, LNG exports. LNG right now in APAC in Asia, it's going for $25 versus kind of Henry Hubs at like, what is it, $4 currently, right? Like that spread is massive for these operators for sure.
Yeah. Awesome. Thanks, Alex. That makes sense. So it's like, so really, when you were like, to go back to why you joined Crux, like when you were thinking about it, like your perspective was, hey, this from my numbers and I guess the bean counting side of things, you're like, this makes so much sense. And so you wanted to jump right in. So one last question though, given that you've definitely worked with lots of CEOs in midstream, if you were the CEO of a midstream company today, what is one piece of technology or strategy, I'd say strategy, that you would prioritize to ensure your company remains profitable regardless of these oil price fluctuations?
For sure. It absolutely would be optionality and flexibility of operations, right?
Yeah.
So to me, it's like that combination you said at the top of combining steel and code is really the future of the industry, right? Like that combination of both physical and digital optionality. Really, like you want assets that don't just help you survive the downside case, but really gives you enough levers to create upside when the macro doesn't cooperate. And with Crux is doing, it allows massive flexibility on your current infrastructure. There's no need to go out and build de-bottleneck or buy one of your peers that can be a huge premium in the market. And
or just
honestly,
doesn't add any value right now because of the state of the market.
Exactly, right. And your investors will probably punish you for that. It's just like, they are demanding, very stringent, very high return uses of your CapEx, right? Like it's no longer the case where these companies can take on debt and kind of grow their top line and just kind of destroy their bottom line and their balance sheet in the process.
Yeah, it doesn't work anymore, right?
For sure. Yeah.
Very cool. Yeah. So essentially, steel and code is the future of oil and gas. Starting here with the midstream, because that's where we need to bottleneck, or that's where we need to de-bottleneck, right? So yeah, thanks so much, Alex. Your perspective was awesome. I think it'll be great for our audience, especially on the technical side, to get some more insights into this. Thanks everyone for coming to listen. This is Crux's video blog. Please do like and subscribe. Check us out on LinkedIn and YouTube. Yeah, and please do comment below if you'd like to chat some more about the current geopolitical and the US's opportunities for energy for further energy security. Awesome. Thanks again, Alex.
For sure. Thanks, Vicki.